Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Tuesday edition. It is Netflix Tuesday, the official kickoff to tech earnings season, we like to say. And it was a fun one after hours. And hopefully, I was going to say maybe you saw it, but I'm going to show it to you anyway. So hello, everybody. Hope you had a great trading session out there. And yes, we got AI-generated graphics here for our Netflix earnings. I wanted lots of data, although this looks a little bit optimistic. Some of the data we saw today coming out for Netflix was just not that good. So I guess I should just start there since we're on the topic of Netflix earnings. Let me just get this piece out of the way, though, which is the economic calendar for today. You can see that really not a lot of overly important stuff, although we did have the building permits and housing starts numbers, which I mentioned. The building permits were much sharper decline than anticipated, and housing starts weren't as bad of a decline as anticipated. So not sure what to make of those ones, kind of conflicting signs there, but it looks like building permits, big decline over expectations, and housing starts was expected to be 1.4 million, came out at 1.42, which is good as well. Okay. I'm not entering your hotel room, John. Put your clothes on, John. All right, and here's our earnings calendar. Netflix, big story of the day, which we'll look at the charts here in just a second, just barely eked out an earnings surprise, right? They're expecting $2.83 per share profit. Came out at 2.88 was their earnings final number, which is a 1.77% beat. And at the end of the day, they were down 0.08%, so call it unchanged on the day. And then all hell broke loose. So let me just start there and work our way backwards. Let's go NFLX. So here's your Netflix chart. And these are the lines we had drawn on yesterday saying, look, it would be no real surprise to see price come ripping back down and hit one of these levels, right? Just because earnings are so volatile, there's so much excitement out there, and people... It's almost the lemming mentality. As soon as that earnings is announced, prices whipsaw all over the place. And when you look at some of the data today, I know I'm not showing you the earnings announcement yet. I want to show you this data right here. So what I'm showing you is kind of what it looked like going into the close. This is the daily candle, by the way. And here is just some of the numbers that were reported. So this is expected versus their reality for the Netflix earnings that came out today. Now, there were some pretty bad numbers here. So first one was their revenue. They were expecting to make $8.24 billion for the quarter. Not bad. They came out at 8.18. So, missing by about $60 million. Not horrible. I mean, still, it's a miss on their revenue. Earnings per share. They're expecting $2.88. Came out at $2.86. Again, not that bad. They missed, but okay, fine. Been a tough year. And as Margaret says, Netflix has too much competition and gets more every year. I agree. And I think we've been talking about that for a while. At least I know I've been talking about that for a while. Is the problem. Hey, Alan, thank you. Oh, no, hey, Alan, I'm happy to analyze that stuff for free for you, but I always do appreciate the contributions. Thank you very much. And the third piece on there is subscribers. This is the important one. I've looked at it from the perspective of saturation, and as you have so much more competition coming into the space, you're going to have dilution. Netflix is going to start to lose people. I hate to say it, but I think some of you may know people or you may be this person. And this is really bad to say, honestly. I feel like this is horrible. But I have friends who have told me they've watched everything on Netflix. Now, let's be honest. If you are that lonely and have such no life that you sit and watch Netflix, I would encourage you to discontinue your Netflix right now and go outside. Because if you watch everything on Netflix, you don't have a life, man. That you're watching so much garbage. Now you get stuck on, all of a sudden start typing in international movies and you're getting German movies for the rest of your life. Crazy stuff. So the subscriber piece is a big one. They were expecting it to be, actually this is backwards. I wrote these numbers down wrong. I'm pretty sure it was 2.3 million was expected. They came out at 1.75, so I don't know how I got these ones backwards, Mike. But they missed on a lot of key metrics. Now, based off those pieces, it doesn't look very good, and this is why I absolutely stay away from earnings. We call this the popcorn trade of the day for many, many, many reasons. And while we let the graphic play here, I'll show you on a 5-minute basis what their numbers look like after hours. Check this out. in that initial 5 minutes, I might even put this to a 1 minute time frame. Let's put the numbers right to where they closed at. They closed right there. So they closed at 333.81. At its lowest point in the after-hours session, it was at 295. So you fell $35 or $38 in a period of 5 minutes, and it might even be faster than that. Yeah, it was 3 minutes. This thing fell $38 per share, which was over 10%. And then a really interesting move happened, though. Let's go back to the 5 minute time frame just so we can see what happened. Netflix came roaring back and is actually right now, based off of relatively bad earnings, in the positive. Now, one of the things that they cited in their release was their crackdown. I think we talked about this on the program yesterday. Was there was a period of time where people could just share your Netflix password with anybody. Now they're limiting it, and I'm not sure. I didn't look to see exactly what the limitations are, but it's probably one of two things. It'll be limited to a specific number of users. So let's say 3 users per license. And it may, this is what I think HBO did, is those users have to come from the same IP address, which I thought was kind of interesting. But I don't know if Netflix is going to do that. Some locking down very tight, and that would be going back to the same IP address, which I think would make it probably not that appealing. I think that'd probably be met with a little bit too much upset frustration from the consumer. So huge move down. Again, what does it mean for Netflix? When I look at the daily time frame here, I was excited to see it drop as much as it did, because its lowest point in after-hours trading is this dotted red line right here. So it came down to a demand zone, just not the lower end of the range, right? I thought maybe we could get lucky and come all the way down to 286. I was watching it, and I'm like, you know what? I'm going to buy it if it gets to 286. I had an order ready for 100 shares just for fun, and I didn't quite get down to my level. Unfortunately, because it just came screaming back 38 points. That would have been a nice little winner in a very short period of time. But who would have known, right? Who would have known that it was going to have that big of a bounce back? And I think that the expectations are that based off of the subscriber loss, that by doing this crackdown on the user ID and login credentials, that's going to start to increase the user base again, because where you have 4 people sharing one login ID, now all of a sudden you might get 2 or 3 new subscribers out of that, and that could be really good for Netflix. And maybe that's part of the optimism there. If you look at the grand scheme of things, this still looks like a beautiful uptrend at this point, right? We bottomed out back here in May. Some would argue we pulled a little double bottom going back into May and June, but it's been making higher highs, higher lows. Trend looks great, but for me to want to really feel comfortable buying into this, I needed to retest the demand zone, which I think it did today. I would argue that 295 level was a retest of demand zone, and then breaking highs to the upside. Can't demand the same IP. I will watch Netflix when traveling. Yeah. Good point, Lisa. I don't know how they're going to do it. I would assume it's going to be a certain amount of people per ID, because I actually I had some family friends stay with me from Germany, and they were in my guest room, and I have multiple devices, and I was TV on in my bedroom. I had a friend who was watching TV in the living room, and then I got kicked off because the third license upstairs came on, and I couldn't log into my Netflix account. I was like, okay, that's interesting. So I think I have a 2-user license or a 3-user license. That's probably how they will do it. So if you have, let's say they have a 3-user license and 3 users are connected, and somebody connects new, it'll kick someone else that's already connected off, which will obviously make you want to not give out your user password because you could get cut off. Tom says Netflix should probably be busy acquiring smaller players, kind of like Nestle in the food sector. Streaming is very fragmented commodity. Yeah, it's great for Netflix because obviously they were first to market and they've got such brand recognition, and they have a ton of money. I didn't actually go to see what kind of cash they have, but I remember seeing last time I checked that they had a lot of money. Real quick, let me look this one up. So I can bring up the financial statements and see what they have as far as cash on hand. So go to old Yahoo Finance. No gratuitous plug for Yahoo Finance. We'll go down to statistics, and that should tell us the amount of cash on hand. But total cash, they got $6 billion. All right, total cash per share, they have $13.6 per share. Let's see. So yeah, $6.6 billion. I agree. They could go out there and acquire different streaming services which threaten them, right? Which put them maybe direct competition. But who's that going to be? Most of the big streaming media sites are juggernauts, right? You're not going to go for Roku. I don't know. Maybe they would go for Roku, but I don't think they'd go for Roku. I guess my question would be, what's the big shortfall with what Netflix provides. I'd argue it's not their studio. Their studio puts out some great content. Are they going to buy a new studio and make even more content directly themselves? I don't know. I don't know what the shortfall here is with Netflix other than just competition. And if they keep buying up other competitors to themselves, okay, great. Maybe we start getting an antitrust discussion in here. But I think at this point, there's just way too much competition. They're not going to go for Disney. I think that's just too big of a fish. Who else would they be going for? Not going to go for Amazon Prime, obviously. That's way too big. So, you'll still have these major players out there. I don't know. I think that the share thing, the login licensing, will certainly benefit their bottom line. And if that's the case, I think that this trend will probably continue here in Netflix to the upside. Really, more importantly, what's going to happen next quarter with regards to subscriber base. Not so concerned with the revenue, but they got to get their subscribers back up. And I wish I had time today to go and find a chart of their subscribers, because I'm pretty sure that when the pandemic hit, yes, they initially surged, but as you guys have pointed out, rightfully so many other competitors popped up that, I know friends who got rid of their Netflix because now they're on Hulu and Amazon Prime and Disney Plus and HBO. It's like, okay, at a certain point, I got so many damn accounts, let's consolidate those down. Maybe Paramount Plus might be a good one as well because it's more prime time TV. I don't know. My was like for one show. What is it, Glenn? What's the show? I've been watching, what's that show? Designated Survivor. I for some reason I thought this was a new show when it came out a couple years back, and pretty good show. I like it. Amazon Prime has so many specialty channels. Yep. One problem I have with Amazon Prime though is they keep advertising movies that you have to pay for. Like, it'd be nice if there was a feature that said shut everything out that is not free. I just want the free stuff on Amazon Prime. That's it. Let's see. I'm in the same camp, at least. I travel 5 to 6 days. Man, lots of traveling, John. Find yourself out in Southern California. Let's go grab a beer. Netflix dropping in my weekly demand zone and pop right back. Cool. Let's bring that weekly demand zone up here because I had the daily on, but the weekly. Fortunately, yeah. I mean, if you go weekly, you're using this big candle here from the 13th of March, so the week of the 13th of March. That's why I use that daily one. It breaks it apart a little bit, and unfortunately, the daily makes it a little bit challenging. But 295 is really kind of right in that upper end of that demand zone. Pretty good. Pretty good. Airbender. Huh. I haven't even heard of that one. I agree with you, GD. As a society, I think we watch way too much. It's funny. My friend is giving me a hard time because I'm not really working on my book. I just get frustrated with it and I stop writing. And I realize that I find myself just sitting down and watching TV because it's just so easy to do. That's the tough one. The terminal list, huh? All right, I get more shows I need to watch. Great, thanks. Now you guys are really messing me up. You're throwing me a bunch of TV shows I need to watch. Anyway, so that's the Netflix earnings. All in all, I think that it shrugged it off pretty well, even though those numbers didn't look great, especially from the revenue perspective and EPS. It wasn't a huge disappointment, and I think many are arguing that it's actually, even though it looks like it's gone up tremendously, up 100% in the past, we'll call it year, still a long way to go to get back to those highs or anywhere near close to what Jim Cramer recommended at, which is $597 per share. I gave up on the blacklist. It just kind of got repetitive after. I watched season 1 and I just kind of kept going over and over and over again. I was like, I'm over it. All right, next question. John, how are you playing Tesla earnings? Is any evidence of it? I'm not playing the earnings on Tesla tomorrow. So Tesla reporting tomorrow after hours. Over the past couple of days, it's just been kind of choppy sideways action. So here is your Netflix price range. We had that little yellow box drawn there. I could pull that box out a little bit further and go for that range. But really, you're kind of stuck in the middle of the range that it's been in for the past few months. We could probably do that same basic, call it guardrails of Tesla, which I'll put those lines on, take these ones off because I already made these trades. And let's get rid of that one. So I'm just kind of doing the upper and lower end of that yellow box. And you can see here, 214 down to about 163 seems to be the range for the past couple of months. And right now you're at 184. So tomorrow we'll probably rip right up into one of those demand zones or supply zones off that earnings announcement. So honestly, John, I'm not playing it. I thought maybe tomorrow I might look at selling some puts on this one because I'm long-term and okay being a buyer of Tesla. But I don't know. I'm not feeling very risk prone right now. I'm looking at myself kind of feeling like more risk averse over the past couple months. I've taken some chances with Boyle and FRC, which FRC has been working out great, but Boyle kind of stung me a little bit. So I'm just kind of taking a more conservative. But if you go to where would I be interested in it, if I can get great premiums selling maybe Friday's put options at 144 before the earnings announcement tomorrow, I may do that. I feel like I don't think it's going to get down to 144. I think it'll probably get to, if it does go down 163, I'm of the opinion that Tesla's actually going to go to the upside tomorrow, but who knows? Don't know. Oh, the kingdom, huh? Whew, all kinds of shows. So that's how I'm trading it, John. I'm really not. We'll see tomorrow. I'll let you guys know on tomorrow's show if I did sell some puts on this one. That's really the only thing I'd be thinking about doing. I'm not going to play this directionally, but I'm fine being a buyer of this at 144. I was a buyer down at 110 and 120 on Tesla, and subsequently got out of my positions because of call options that I was selling against it. But the 145 maybe tomorrow, but I have to wait and see what those numbers are. Before I make that jump, I don't want to touch it. I don't like trading earnings because you end up with a neck brace. It's just crazy. Sell the tops, buy the bottoms, Oliver. I really just try to keep it as simple as possible. Sell the tops, buy the bottoms. That's all I'm trying to do. In this case, I'm actually going beyond the bottom, but I really want to wait and see. If you look at the percentage decline of that zone, this is just an average afternoon for Tesla. So, for example, if I bring it down to this line right here, that'd be an 11% move if it hit the bottom. And it would be a 16% move if it hit the top. And of course, I know Tom Barr's here going, well, what about that ATR? Well, I'll bring up ATR here, and it's declined significantly. Its daily ATR is still $8. But on an earnings day, this downside here, which is at 11%, that's a 20-point move. Well, ATR is 8, so it's a little over 2 days worth of a move. On an earnings, that can happen in a matter of seconds. So I'm not feeling comfortable with that the lower end of that yellow box there, but I do like going out a little bit further to an area that was the origin of the gap, which is 40 points away. I'm much more comfortable with that. That's 5x on your ATR away from current price. And I think that could be a logical point for tomorrow. But again, I'm not going to commit myself to anything right now. I really want to see what happens in tomorrow's trading and see kind of how the day shapes up and what the premium might be. But I won't be doing a bunch of put options on that. 5 would probably be my max, but we'll see. We'll see what happens tomorrow. Okay, what else do I have? I addressed this one in the past, but I just think I might be worth it to mention again. And that's Kevin. You asked, why are you so against pharmaceutical companies? They are great. There are great moves. Look, pharmaceutical companies are great. I love pharmaceutical companies. They're essential. The better living through science and chemistry. Unless your name is Martin Shkreli, then shoot that guy. So hopefully he gets back to prison at some point. But why I say I'm against pharmaceutical companies and drug stocks and therapeutic companies is just because of how you get burned all the time. I've lost way too much money trading pharmaceuticals. And I guess today it's a perfect day for you sending this question, but if you go to something like TradingView, over here on the right-hand side, there's a little fire icon, right? If you go to that fire icon, that tells you the biggest gainers and decliners on the day. All right, so I'm just going to click through these companies just to give you an idea of why I don't like trading pharmaceuticals and drug companies or therapeutic companies. So biggest mover today up 98%. Bellis Health, check, that's in that category. OBLG, Oblong, don't know what they do. DRMA, which is Dermata Therapeutics. Oh, there's another therapeutic drug type of company, pharmaceuticals, up 60%. PTPI, oh, Petros Pharmaceuticals. So these are all the biggest gainers, which would probably validate Kevin's point of, hey, great movers, right? Well, let's look at the biggest percentage losers as well. TPST, oh wow, Tempest Therapeutics, down 40%. Arlay, which is really a therapeutics, oh, look at that, down 36%. I don't know, SIA, BBLX, Knight, Kinnate Biopharma, down 31%. So this is it. That's the only reason why I stay away from it, is because you might have a great company and think everything is awesome, but if they make or miss a phase drug approval, so whether it's phase 1, phase 2, phase 3 FDA drug approval, these things it's either going to make it or going to break it. In reality, from a long-term perspective, the only way that I would personally trade drugs or pharmaceuticals, which in my trade plan says I can't trade individual companies, is to go out there and look at the company themselves. if you're looking at a pharmaceutical company that has one product, so let's say, I don't know, it's an insulin drug, right? And that's their only product, run away. Because if they miss any kind of approval, your company's dead, done in the water. I'd rather go with somebody like a Pfizer, a Merck, someone who's got a lot of different products to spread that risk around. Honestly, if I'm going to do it, I would probably just buy an ETF that represented the market segment I wanted to get into. You could obviously go to, XLV, go to healthcare ETF, and you have some of these biotech pharmaceuticals, but there also is a biotech pharmaceutical ETF. Let me see. Let me bring that one up here. Biotech. Let's see which one I want to use. We can use IBB, right? That's a biotech fund. Let's go IBB. So I could buy into IBB and then have exposure to a ton of different biotechs and pharmaceuticals. If you're not quite sure what these ETFs hold, it's easy. You go to barchart.com. And then at the top, you just type in whatever ETF it is that you're looking at buying into. Hit enter. And then down on the left-hand side, you can see the constituents. And that'll tell you the holdings and their weightings, which I think is important. So, right away, I'm going to get some of the big ones. I've got Biogen. You can see you've got Amgen, Gilead Sciences, Vertex, Regeneron. But you got Moderna. And then down in lower, you're going to have a lot of more specific companies that are focused maybe on one or two products. Generally, the biggest allocations in these ETFs are from the bigger, more diversified holdings. So, but you've got a lot in here. Galapagos NVADR. No clue what they do. But at least I have exposure to pharmaceuticals without taking on that single pharmacy. There's 277 companies in this fund, by the way. That's pretty good. I'd much rather buy this than try to pick a biotech or pharmaceutical stock. They're just too crazy. Way too crazy for me. All right. Oh, yeah, ISRG. So hold on, it's a big app. Thank you very much for allowing me to go back to this list right here, which is your earnings calendar. I made it to Netflix. Yeah, Intuitive Surgical is a different one. You're correct. I wouldn't call it a pharmaceutical. Matter of fact, I put this down as one of my artificial intelligence plays. So here's ISRG, which reported after hours today, and you can see they beat earnings by 4 cents or 3.36%. And then you go here, 7.94% gain on the day. Let's go look at ISRG. Yeah, I mentioned this one yesterday. I'm pretty excited about ISRG going forward. So you're up about 8.8% after hours. Let's put this on a 5 minutes so we can see the pop. Let me get the ATR off of here. Man, nice move. Just shot straight up. And it's funny, I'm such a dork. I always like doing this. I'll always go to, okay, well, here's the high point it achieved in the after hours session. I'm going to put 2 lines on. Where is the highest point and then where is it at right now? And then I always like to click back to the daily and see, did this line up with an area of supply? Yeah, you could make the argument that it stopped at this last area of overhead supply, which is really between 298 and 307. So stopped. Of course, we don't know where it's going to end up tomorrow. But all in all, a nice pop for Intuitive Surgical after hours. Big pop there. Yeah. So then there's Goldman Sachs. Actually, Goldman Sachs didn't miss. If you look here on their earnings statement, Goldman Sachs actually came out, they were expecting $8.14. They came out at $8.79, and that's about an 8% beat on earnings, but we're down 1.7%. And I'll bring up the GS chart here so we can see that one as well. Now the difference here is that's BMO, so that's before the market open, and you notice that even with those numbers, and I didn't read through their statement there, Oliver. I didn't see their statement as far as what happened with that one. But notice big gap down and pretty much rallying most of the session, recouping most of the losses. So not too bad for Goldman Sachs considering. I was watching FRC after hours. This has been a weird one as well. Extremely volatile, and I can't figure out why it's had this huge pop like this in the after hours. This can't be because of Intuitive Surgical. First Republic obviously is a bank, so interesting they partner with Apple. Oh, with their so Marcus is who Apple's using? Huh. All right, didn't know that. Learn something new every day. And there's a ton of other ones that reported here, and you notice most of this is really good. If you look at the earnings beat, it's all positive numbers. So every single company here beat earnings. which is bizarre because I'm seeing different numbers. Like, as you can see here that Netflix, it looks like it beat earnings here, but on the other numbers I got, which was from Yahoo Finance, it said that they missed. So who the hell is giving me the right answers here? Anyway, it looks like everybody here beat earnings. And the ones that I'm more interested in right now are the bank stocks because I still have JP Morgan, I still have Bank of America, and I still have FRC, First Republic. So that'll be for next Friday is my FRC, and I think, yeah, next Friday is also, or this Friday is for my Bank of America and JP Morgan trades. So there you go. Took a plus C on Goldman Sachs. Oh, nice. Long call. Good. Well, I'm curious why you did that one, Lisa, because I looked at the GS. There wasn't I don't think it came into anything like a really substantial demand zone, right? If I look back on, let's say, a 5 or 15 minute time frame, was it just catching that falling knife? Because I look back, I guess I ran through all these early this morning, and I didn't see anything that screamed out at me as a potential buy. I only had one trade lined up for today. One. And by the way, I'll let you guys know about that one in a second. It may actually be a great potential trade for you guys tomorrow as well. But good for you on that Goldman Sachs hit. That was a good one. Play those extremes on earnings. Always a fun thing to do. This is, if Apple partnered with Goldman Sachs, Marcus, how is it Apple can offer a higher interest rate on savings accounts? Marcus is just... no, Marcus was more than that. It's on their savings account? Yeah, I'm not sure. We checked the CD. It was like 5%. Let's just real quickly check that Marcus savings rate. Is it 3% there? You know, it's funny because it's 3%. It's 3% at 3.9% at Marcus on just an online savings account. 3.75 at Ally, and it's 4.5% if you go to oh, come on, Merlin. The other one, SoFi. So SoFi had a pretty good rate. I think it's 4 point something for SoFi, but if you connect your direct deposit. There you go, Lisa. That's what I thought. I was like, yeah, you're usually supply and demand, huh? But yeah, unnecessary panic. Love it. Love when people are freaking out. All right, so that's how. I don't know what Apple is charging. I'll look at that one maybe tomorrow and spend some more time there. Cambridge Trust. So there's a couple other weird ones now. One thing, when you look at those rates and it says, hey, 4.75%, always look at the small print. There was another one. It might have been Cambridge. And what they'll do is it says your first 5,000 is at 1% or 0.5%. And then over 5,000 will be that 4.75. So basically they're getting that first chunk of money because they realize their average deposit is probably rather small. We'll pay that very low interest, but we'll use that 4.75% teaser rate to bring you in. So definitely. I've actually been doing this in the course that I was teaching on personal finance. We talk about this a lot. Let's see. Let's just type in high yield savings account. TJ, can you type that in for me? Let's go right here. You got bank rate. I don't usually click on the add one, so let's go down here to bank rate and go to high yield for April. And there was one, and it may actually be the Cambridge. I forgot the name of it. It was one I'd never heard of before. It was a CIT bank. So you notice here, CIT bank, right? It looks really good. You're like, wow. Minimum balance to get that yield is 5,000. Okay, so you're thinking if I put in 5,000, then I'm going to get 4.75. But no, that's actually not the way that this works. So let's go read the review. I don't want the review. I want to take you to their site and log in, just so you can see it. There you go. That sounds great. Let's go click on it. See if I can sign up. Unfortunately, it doesn't have the fine print here, but the CIT bank, that's how they're doing it. The first few $1,000s, they don't give you the money that you think you're going to get. It's a scam. So it's pull the rug on you. All right, I'm gonna leave it at that, or I could fall in this rabbit hole looking for prices. But I'm actually in the process of moving things over to SoFi. At least my savings and checking, because SoFi will give you 4 or 4.5%. You said 4%? I thought it was higher than that, but they'll give you. I thought it was like 4.25%, but what they'll do is if you put in direct deposit, you get you get more. So there's there's only 4%. Okay. So 4% for SoFi, but that is up to any deposit. There's no minimums and there's no fees. Ally, for example, charges you a bunch of different fees for you, bunch of different fees for the number of withdrawals you take out and all kinds of ways to penalize you and charge you more at Ally. SoFi is like, nope, we're not charging any fees for anything. And they'll also give you over 1% for your checking account, which I thought was pretty cool as well. Anyway, not to be a marketer for SoFi, just the thing is you got to set up direct deposit there. All right, let's talk about the trade that I was wanting to make today. And the one that I was excited about and now maybe more excited for it today. And that is BYD, Boyd Gaming. So the only real negative for me on Boyd Gaming is its volume. It's very, very thin for my liking. So it's not like it's something that I'm going to be trading a lot of shares. It's trading, maybe 750,000 to a million a day average. That really is not great from my perspective. I like 1.5 million or more. But as you can see, let's go to yesterday. Oh, it's got that stupid post thing. Yesterday, we finished with a shooting star. And I was like, okay, I was all ready to trade it if it broke down below today because I think it's coming into overhead supply. And therefore, I thought we'd see it sell off a little bit. But notice what happened today. Well, we didn't get the sell-off. It actually gapped up even higher into overhead supply. So for those who want a yellow box there to represent that supply zone, I will draw it right there. So you came right up in that overhead supply zone. It's actually not drawn correctly. You can't. There you go, somewhere right around there. That's your overhead supply zone. Came right into it. Now all of a sudden we have a hammer coming out, a shooting star coming out of an overhead supply zone on Boyd Gaming. This will be for 2 days in a row, a trade that I'm looking at making for tomorrow's session. We'll have to wait and see how it all pans out. But right now, that one's looking pretty good. And for those that want to know what the rules are going to be, you're waiting for it to break down below the low of today. Today's low on this was 66.33. So if we get a low below 66.33 tomorrow on BYD, potential short. But the key is it has to open above the line for me. And this is just one of my rules. That's it. So I'm looking for the rule-based system for myself. And maybe we'll get some sell-off there in BYD. All right. So what was that question? Someone come in here. Different from Citibank. Yeah, I think it is, Rob. I think it is different. But I was digging through all of them because, I've got money sitting in a savings account. Just curious, how many of you have your money sitting in a Chase savings account, or a Bank of America savings account? How many of you have money sitting in those accounts? No, I'm going to buy directionally, so I will probably sell short, or most likely just sell short on the underlier tomorrow. Unless I didn't check the option chain. If there's enough open interest, then okay, I might use options for that, but I'll probably just go straight outlier. Neither? Okay. A lot of people are using Chase and Bank of America, which is 0.01%. Yeah. So, for me, it's like, all right, I've used them for a long time, and it's just kind of a waste of money to keep it there. So I've been shopping around a lot. Just the checking. Yeah, big up. No way. Yeah, I know. So I'll update you on that one. I like I said, I wanted to go to SoFi because the 4% plus the checking. The checking's a big one. Obviously, most of us are going to have a system set up where you have your checking and your savings linked, right? And of course, banks will incentivize you to have more combined in those accounts, but they'll usually want you to have more in your savings account because they'll reward you with a little bit more interest. A lot of times, we really just need one account. If I could just have a checking account that was a high yield, give me 4% for my checking, I wouldn't need a savings account. So they always want to create those two separate ones. But in the Chase and most places, you get no interest on your checking account. With SoFi, they actually were doing I think 1.25% for checking, which is still better than anything you get at a traditional bank like Chase or Wells Fargo. Capital One has good deals. Yep. Both checking and savings and no ATM fees. Yeah. Short it, Bank of America? Well, first off, Bank of America had earnings today too. So let's look at that first. Here's your Bank of America earnings. They came out before market opens. They beat pretty handily. They were expected to have 79 cents. Came out at 94 cents, so beat by almost 19. Slightly up on the day, 0.63%. So really not much to speak of here from a technical perspective. I did not dig through Goldman Sachs or Bank of America. I just looked at Netflix numbers to see kind of how they lined up. But all in all, I'm still relatively bullish on Bank of America. The number yesterday that got me was the $53 billion worth of new money coming into Charles Schwab. I would expect that there was probably more than that coming into Bank of America and JP Morgan and Wells Fargo and the big name banks like that. Unfortunately, I think that this is a terrible thing, because what it's going to do is it's government and the banks forcing out the little guys. Really what they did by saying they're going to bail out the systemic risk banks is you've got everybody pulling out of small banks and putting their money in the big ones. So sadly, I think you'll see a lot of these tiny little banks disappear here soon. Again, we talked about that yesterday, where they'll either notify you or sell off to bigger banks. And I don't know. I like to see the small local banks thrive. Unfortunately, that won't happen. But the play I'm still thinking is still there is this Bank of America. I mean, it was a great surge yesterday. Things are looking fantastic on Bank of America. So awesome. Great. And my shares will be taken away from me this Friday. So I had the 29s? I had the 29 call options. So no problem. This jump up we had for the past 3 days, while it's been awesome, most likely my shares will be taken away this Friday. Same with my JP Morgan. So I'm long JP Morgan and Bank of America shares, and I've sold calls against both those positions, and those will be both taken away from me. Wells could be in trouble if it's commercial real estate loans. So that's, we talked about that the other day. I actually went through and was looking at what banks have the biggest exposure to commercial real estate. And surprisingly, JP Morgan was one of the highest ones on the list. I didn't believe that. I didn't really think that we would see JP Morgan leading the list of commercial. But I'm going to dig deeper for myself, just because what I'd like to find is, show me the list of not the big tier banks, right? Not your mega banks. Show me the mid cap to smaller banks that have commercial real estate exposure, and those are the ones I'm going to look at potentially shorting. Because if we start defaulting on a lot of these loans for commercial real estate, those banks are going to get hit hard. And just judging by the trend that I'm seeing and hearing, and just going to different cities and seeing how empty buildings are, especially the trend that's coming out of San Francisco. COVID kind of killed commercial real estate, and now San Francisco is just kind of killing itself because of their lawlessness that's going on up there. It's just absolutely crazy. So, I'll let you know what I find. It's not the highest thing on my list, but I do think a commercial real estate bank, especially the small ones, could be in real trouble. Jamie bought the commercial. Larry, good to see you, Larry. Hey, man, what was the conversation my friends brought up last weekend about moving money to bigger banks? Yeah, it was a very foreseeable thing. It's kind of like a magician, right? A magician does a trick where they'll do one thing, but the real magic is happening over here because your attention is focused on this one. Well, what the banks did is almost the same thing, right? They've now magically created a system where people are going to move away from your local savings and loan, or the name that nobody knows of because your friends work there and they give you amazing service and great deals. All the money's poured, not all, but a lot of the money's poured out of those smaller guys and gone into the big ones. And that, to me, was orchestrated by the Federal Reserve and FDIC. Kind of sad. Really don't like that. Oh, yeah, the Chicago lawlessness that's been going on. Man, I'm not a concealed carry kind of person, but if I was walking the streets of Chicago, I'd be armed. That is insane what's happening there. Chicago is such a great city as well. Anyway, let me not bring us down with the falling apart of Chicago and San Francisco, which are both in bad space. Let me go to economic calendar and earnings for tomorrow. Here's your economic calendar. From the U.S. perspective, it's light, right? It's very, very, very mellow compared to what we saw today. You have CPI numbers coming out for the European Union. That's expected to stay at 6.9%. That's their final, but that's already been priced in. For Canada, you have housing starts as well as some IPPI numbers. For the U.S., you really have just crude oil inventories, beige book, which is an important one from a market-moving perspective. It's Fed thoughts. And then FOMC member Goolsbee will be speaking at 2:30 p.m. And these are all... Oh, crap. I think this is Pacific time, I think. So that's it from your economic calendar. But the earnings stuff is really what it's all about for tomorrow. Tesla leads the list. After market close, you can see a lot of these happening after market. I'll start with the before market, since markets open before they close. You've got Morgan Stanley, Abbott Labs, you have Synchrony Financial, U.S. Bancorp. So, by the way, U.S. Bancorp also has a very large exposure to commercial real estate, so I'm curious to see what that number may look like for U.S. Bancorp. But we started to get a little bit of diversity in the earnings season for tomorrow. You've got Tesla, obviously the biggest one on this list. That's after market close, but you also have IBM, you have Lam Research, you have Kinder Morgan, Alcoa, so you get aluminum in there, Synchrony Financial, already mentioned, and then Las Vegas Sands down there near the end, reporting earnings tomorrow as well. So it's going to be a pretty busy day from an earnings announcement perspective. And of course, as you guys know, there's a lot more than this. I just cherry-picked some of the top market cap ones. There's a lot more smaller regional banks on this list that could be market movers for you going forward. All right, I think that's going to do it for me. Dread going into Bank of America, everyone. Is Bitcoin a security or commodity? Oh man, I don't know. I did a XLT general session this morning from the Trading Academy, and it was great. It was just kind of an open forum on cryptocurrency and digital assets. And I don't know if any of you saw the testimony with Gensler, and I forget the senator, but multiple senators just teeing off on Gary Gensler. Did anybody watch that? Boy, it is, to me, it was just such colossal ineptitude and just bizarre at how this can possibly happen. And they asked me, said, do you think that Gary Gensler is going to get fired? And I was like, I kind of do. And mainly because of his reaction to testimony today. So nobody saw it? Nobody saw that one? I'll tell you basically, I should wish I could play the video for you, but I don't have it all queued up here. Basically, a senator asked Gary Gensler about labeling cryptocurrencies and specific ones. So he went after Ethereum. Oh yeah, not poor Gary Gensler. He did not do himself any justice today. But if you guys get a chance, check out the video. But essentially what happened was the senator asked Gary Gensler to say, he says, Ethereum, is it a commodity? And Gary Gensler's like, well, if you look at the 13,000, and the senator immediately cuts him off and goes, I'm not asking about the 13,000 other cryptocurrencies out there. I'm asking you about Ethereum. Is it a commodity? And Gary Gensler goes off again. Oh, well, there's different considerations to look for with each of these different coins. I'm asking you specifically. He goes, I'm surprised, Mr. Gensler. We had this conversation before this testimony, and now I'm asking you the same question I asked you earlier, and you can't tell me if it's a commodity. And he went on and on and on. It's like, do your job. I make this point, like if I hired any of you and I said, hey, I need you guys to tell me whether you pick any topic. Are we growing sales or are sales declining? And what you've done is for 3 years, 4 years, 5 years, you've gone, well, I don't know. Sales could be going up on Thursday, maybe, but possibly on Fridays they go down. But over the month, they're down, up, sideways, maybe, kind of, sort of. I'm firing your ass. You're gone. Beat it. Go away. So I think, watch the testimony. Maybe on tomorrow's show, I'll bring up that small little snippet and play it for you, because it's just, you got to hold your head in your hands and go, are you kidding me? I make the point that I could sit down, if you give me 2 university professors, the chief regulator at the FTC or SEC, and the chief regulator at the CFTC, and lock us in a room and say, okay, you've got a couple hours. I will come out with a clear documentation list of this is a commodity, and here's all the cryptos that fall in that category. This is a security, and here's all the cryptos that fall in that category. Smack my hands, be done with it. Now, all the exchanges know what their risks are from a regulatory compliance perspective, but this moron, Gary Gensler, who's was a professor, was MIT, I think he taught at MIT, and he taught digital assets class. Like, you still can't tell people what's a security and what's a commodity. Do your job or be fired. Unbelievable. Blows my mind. Anyway, now you got me all fired up. There's no whiskey in sight. Let's see. Everyone would be confused if he's speaking for himself or on behalf of the SEC. Sounds like he's just good at trying to avoid his job in litigation. Maybe, Chase. What it reminds me of was Alan Greenspan. And I grew up, my trading infancy was done under the Alan Greenspan administration. And I love Alan Greenspan. I really didn't even know what the Federal Reserve was back then. I mean, I was in my early 20s. Most 20-year-olds, Federal Reserve, who cares? That was my first exposure. And Alan Greenspan was the master. He even wrote it in his book. He called it Green Speak, where he said, a young junior senator would ask me a question about something, and he would start with words that sounded good and then just go off on some crazy tangent and come full circle, having explained nothing about the question that the senator had answered. And then the senator would go, thank you very much, Mr. Greenspan, for your time. I appreciate it. Because most of them are idiots. Most of them are reading some question that was written by a staffer or somebody in their administration, but they don't know the answer to the topic, which is why I love today's testimony, because that senator clearly knew his stuff and was absolutely not going to give up until he made either Gensler answer the question or made him look like a complete idiot. And complete idiot was the answer that came out of him. What about its cryptocurrency? He probably can and doesn't want what he says to come back to haunt him. Probably. But at this point, he's going to get fired for it anyway. You know, you have to, if the whole world is asking you, hey, what's a security? And you are the Security and Exchange Commission, that's your job. That's like the police department. Actually, no, that's like the Supreme Court not being able to tell you that this is a law or not. You know, is it a law to illegally carry or is it a law to sell black tar heroin in a high school? I'm pretty sure that's illegal. And no court in the land is going to say, well, hold on a second. It could be, maybe we don't want to, ruin our... These are definitive things. It's actually not that hard to say this is a security or not. Anyway, I'm done. My rant's over. So for tomorrow, we will obviously be focused on Tesla. I'll be looking at potentially making some trades on Tesla, as well as Boyd Gaming, BYD, to the short side, and maybe some of these other banks, but my bank exposure is a bit loaded up right now, so I'll probably leave it at that. I've got no guests, so guys have questions, comments, feedback, things you want me to talk about on tomorrow's show, do me a favor, send them on in. TraderMerlin at Gmail is the name that's on the screen, or I guess I could use this graphic right here. I don't really use that one too much anymore. It's kind of a weird one. But if you go to TraderMerlin at gmail.com, those questions will come directly to me, or put them down below any of the YouTube, as many of you do on a regular basis. So thank you guys so much. Have a fantastic remainder of your day, and I will see you tomorrow. Take care. Nope.